Welcome to day 12 of the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure once again to introduce Mr. Darren Sinden, market commentator for Admiral Markets. Good afternoon to you, young.
Good afternoon to you.
That's obviously quite a big day today, politically speaking, anyway.
Yeah, I mean, it's probably the most important day. Well, the second probably the most important day, because tomorrow probably is the more important day. But yes, obviously the nation going to the polls, expectations of what would look like pretty much like a dead heat, because we'll know more from the early hours of tomorrow morning. But as the markets in Europe have taken a bit of a fright, particularly the UK, where Footsie sold off quite strongly today, as I think perhaps the prospect of a hung parliament or a Labour SNP coalition type arrangement has really struck home, and people have voted with their feet.
And as we always say, markets don't like uncertainty, do they?
They don't move slow.
Okay, so if you're watching for the first time, we've got 5 segments to talk through today. Let's go to the first slide. Data released over the European session ahead of obviously the US market opening. What are the key components today?
Okay, Mace. Well, I think the first thing that struck a chord was prior to the European session, but that was the Japan Services PMI read for April. This is another one of these purchasing managers index surveys conducted by Market, and the thing here is that it came in at 51.3 for April versus a prior read in March of 48.4, so sharply better. Almost 10% better, so much better in fact that I think whilst it's a positive number, I think we probably need to wait for confirmation, with a further number to say that the worm has turned, as it were.
Okay.
And then we look over to France. French industrial production for March came in down at minus 0.3%, and that was actually lower than the forecasted negative 0.2%. So a bit of a surprise, really. Some weak data from the Eurozone, where things are only
meant
really
to be
positive. Yeah. Then German factory orders for March, 2 numbers here to look at. Month on month was disappointing. The read came in at up 0.9% against the forecast of 1.5%. And then if we move down to the year-on-year German factory orders, though, a much better scenario, 1.9% growth, and that was seen very much as a positive. And I think that the Euro has taken that to heart today, rather than the month-on-month.
Understood. Okay, let's take a look at the FTSE 100 movers.
Lots moving around today. I've just picked out a couple of names that caught my eye. RSA, Royal Sun Alliances, you and I would have known them, up 2.32% on their Q1 trading update. The key there was they were able to point to higher operating profits despite a fall in turnover, and that the management was quite optimistic there. Not so, unfortunately, Morrisons Supermarkets whacked 6.5% today. Q1 sales were lower. And it took a £30 million charge. And though they're making all the right noises and doing all the right things to try and turn the business around, it's obviously still heavy going. And I think the city once again has voted exactly with its feet and called it down accordingly.
Understood. Okay, let's take a look at the next slide. The M&A rumours and movers.
With a bit of transatlantic M&A. To talk about today, US company Equinix, that's ticker EQIX, has approached the UK listed Telecity, TCY, in London, re a possible takeover, and mooted an offer of around £11.45 per share. I believe I'm right in saying that Equinix will have to put up or shut up officially by the 4th of June. That was a 27% premium to Telecity's closing price last night. Telecity were up as much as 20% on that news. They've come off a little bit, probably with a month up just 18%, just shortly before we came on air. What's interesting here is that Telecity itself was in the midst of a deal to buy a European competitor, Intexion, for around $2.2 billion. Now that deal itself is in doubt.
Okay.
This probably isn't going to be the last of the M&A that we see in this space, because it's a very competitive space, yet it's still growing. And just to give you a flavour of what sort of data centre market might be worth, spending set to reach 143 billion per annum in 2015, say Gartner research, and then that figure itself could double over 5 years. So it's a global spend. Nonetheless, it's a significant market, and it's clear that we won't have seen the last of the M&A in this sector, whatever the net result of this three-way battle now. Yeah.
Understood. Okay, let's take a look at the US data points to keep an eye on.
A quiet session, really, as far as data's concerned, ahead of obviously
Non-farm tomorrow.
Most important number of the month, probably tomorrow. So in terms of what we've got the sort of precursor to non-farm payrolls, weekly jobless claims, looking for a slight weakening here. So looking for 280,000 new weekly jobless claims versus 262k last week. And then the other figure that we're looking for in the US is consumer credit for March. Going the other way really to the jobs number, and we're expecting modest growth, forecast of $15.9 billion for March versus the read of $15.5 billion of consumer credit in February. So two numbers to watch, but obviously, all eyes really on the UK election, and then tomorrow the big number.
Non-farm payroll, understood. Okay, let's take a look at the US pre-market movers and levels.
Okay, well, I picked out a couple of stocks here that took my eye. Cornerstone is another cloud computing play even. They're up 6% pre-market. They beat on revenues, missed on EPS when they reported last night, but they raised sales guidance for 2015. And again, positive conference call, sales guidance raises. The market loves that and has rewarded them accordingly. TripAdvisor, people will be familiar with this. If you're booking a holiday or going out to a restaurant, 9 times out of 10 these days you'll look at TripAdvisor and see what other people have thought of it. They had mixed numbers yesterday, naming FX pressures as one of the reasons for that, which is obviously interesting. But again, the numbers were better than forecast, and again they were able to confirm their guidance, and they're up around 4.69, 4.7% prior to the market open. In terms of levels to watch today, S&P, we're looking for 2067 on the downside, 2088 on the upside. All these are obviously a little bit lower than they were yesterday. 1775 on the downside for the Dow, and 17992 for the upside figure there. Euro dollar, no stopping the euro really, despite that possible weak numbers earlier. 112.34 your downside level, 113.80 is the upside level. Another resilient currency, the Aussie dollar, 78.71 is a downside level, 80.40 to the upside. Dollar yen, but actually surprising, the yen strengthening here, so 118.87 is a downside level, and 119.60 on the upside. And in cable, obviously ahead of the election, 151.48 the downside level, 152.63 the upside. But I suspect any moves that do happen in cable this week, will come tomorrow.
Right. If I was watching this for the first time, Darren, the levels to watch today, are these chart points? Are these old highs, old lows?
Yes, exactly that. Simple support and resistance moves typically off of an hourly chart.
Okay.
Just give people an idea of a price range to watch. Yeah, where a break could signal a larger move.
Understood. Okay, that wraps up the Wall Street Crossover Show. Thanks once again to Darren Sinden, market commentator from Admiral Markets. Have a good day.
Thank you very much.
Thank you. Have a good day, people.